Hello from Davos. Davos men and women this year are quite optimistic about the world, and that's different from previous years, especially about the economy and financial markets. And to discuss this and to give us a sense of what things are really going on is Douglas Flint, Chairman of HSBC. Thank you for being with us, Mr. Flint.
Great pleasure.
So let's start from this optimism about economic growth globally that we're hearing here in the mountains. I mean, do you agree?
Yes, I do. I think that the major economies of the world, particularly the United States, but also elements of Europe, the UK, are showing very strong signs of growth. And indeed Europe itself, we forecast to return to growth next year. And China, I think, has got some really important structural reforms underway, which again will underpin its own performance. So if you look at the major elements of the world, we're optimistic on all of them.
Is there anything in particular that worries you? I mean, if there's one thing that kind of is preoccupying you at the moment?
I think one's always worried about what one doesn't know about. There are an awful lot of uncertainties around. Has the market's expectations around quantitative easing and its unwind, will it unwind the way people expect? Will the banking union and the quality reviews in Europe come out the way people are expecting? Will the sustainability of economic growth seen in the UK continue in a controlled way? Will the US deliver the promises that it looks as if it will? So I mean, if things turn out to be unexpected or there's a shock along the way, I think there'll be quite a severe reaction. But at the moment, on the basis of our own view and indeed consensus, things look set fair.
And let's talk about your sector, the banking sector. We're starting to see the outline of the regulatory system that was promised to us after the crisis. Do you think that the regulators are striking the right balance between keeping the system safe and their economy growing?
I think with hindsight, people will have a much better understanding of whether that's the case. But I mean, clearly they're trying to do that. And I think it's good that we're coming to the point where the framework is becoming a lot clearer. The announcement on leverage in the last couple of weeks, again, was another important piece that had been missing that has now been set. So there's an awful lot to do to implement what's been done, and there are still elements that are going to be examined afresh or examined for the first time. But we're getting a much better sense of what the system will look like, and it's into implementation phase now.
And as the head of large multinational banks with operations around the world, are you worried that the regulators are moving along somewhat conflicting lines at national level, and so you as a bank have to comply with many conflicting rules?
I think that's an inevitability. I mean, every system has to respond to its own challenges. I think there's an underpin of a global consensus on a minimum level, which is good. And then there's bound to be some element of super equivalence or specific circumstances for individual countries. I think we just have to accept that and calibrate our response to that in line with what we're being required to do. But the important thing is that we kind of stop the debate in terms of what needs to be done and get on with implementing it. But I do think, responding to your point in a different way, it's important that the regulators keep in mind that if we get a balkanization of the system because the specific rules for individual countries become too different, they will unwind some of the harmonization that was the objective of the original G20 mandate.
But you are facing a structural problem in that national regulators are trying to regulate essentially multinational institutions such as yourself. So is there an issue there that cannot really be solved?
I think it's an inevitability. National regulators are responding to national policymakers who, of course, have to recognize the burden that was placed on fiscal systems, on taxpayers, of weaknesses and failures within their banking system. So given that the response came through fiscal systems, they have to take a view to protect those fiscal systems and therefore have a nationalistic view to some degree on top of what's happening globally.
I see. And let's look at, there's a lot of talk about inequality in Davos. It's one of the big themes this year. Where do you think the financial industry stands in that respect, both in terms of how it's viewed by politicians and people and its own efforts to redress some of the issues to do with compensation and bonuses?
Look, I think this is going to be an issue much broader than the financial system. I think one of the roles that the financial system has played and can continue to play, but I think there's an element of risk to it, is that not harmonizing, but improving financial equality or removing financial inequality is best come through globalization, through increased trade, through capital flows, and some of the national regulation is in some way beginning to put some element of financial exclusion on countries and segments of society that are much more difficult to risk manage. And I think that would be a great pity, because it would exacerbate some of the inequalities that are being pointed out today.
That's very interesting. And on that point, unfortunately, we have to leave it. But thank you so much for being with us. Douglas Flint, the chairman of HSBC.
My pleasure.